Well, hello everybody. It's me. It's Tuesday. It's OCTA. And I've uncovered a whole bunch of stuff that paints a very solid picture of where we are going next. Because that's the number one question on everybody's mind. Are we going up or down? Bull market over, bull market still on, and everything else. So I don't know as well what's better. This, or this. Probably a small me is probably better right now. But let's get into the story. Thank you as well, Sean Donnelly, K8, T&D Tesla. Sorry for keeping Team Europe so late. It was a busy day, a lot of activities going on. So let's go. And not financial advice. And thank you to Jerry AT. CTA. I've learned more from this channel and Patreon the last month than I ever did from college studying finance and economics. You've cracked the code for investing, but the most impressive thing on me is your ability to teach it. That's the real value here. And the models are amazing also. Thank you so much. That was the nicest note ever. And thank you to the team as well behind the scenes. Today, I'm going to talk about the good news first because people need a little bit of a boost and everybody's a little bit down on the dumps. And really, it's been one hell of a roller coaster. I've never seen a roller coaster like this in my life. But let's get into fear and greed first. Stock market fear and greed is extreme fear. 18, pretty scary. And we know when this happens, typically it's the time to buy. Also, crypto fear and greed says it here. The buy zone, 10, 15, under 20. And the sell zone, up above 85, 90. Happens every time. You cannot make this up. It's almost too easy sometimes. So I understand why everybody's so fearful and terrified, but you shouldn't be. And I explain why. Now, God, how do I turn this crap off? I should be on my work. What happened? What'd I just do? Uh-oh. I lost everything. Anyway, I tried to turn off that bloody phone. Ugh! Leave me alone, people. Anyway, DBF 430, thank you. Back to the story. We had the worst February since 2014, which is pretty scary. But we've also had the worst March since 2020 so far. This is the first big clue that I believe things will be good in March because historically, March is very good. But what happened in March 2020? Well, that's when they launched C19. Remember those days? Hard to believe. That is nearly so many years ago. Madness. But anyway, historically, the gains for March for Bitcoin are approximately 10.1%. The gains for Feb are 14.6%. But we were down. And normally, Feb is a huge month, especially in this stage of the bull run. They are the green highlights here, 2013, 2017, 2021, and 2025. And it has not been that case so far. But let's get into more of the story. AltSeason is firmly now in Bitcoin season. We are down at 25, and we haven't been here this low for quite some time. Actually, it's back October was the last time we were back here. So it has been quite a while since we've been back. And the assets, whoops, back one, jumping the gun there a bit. Top 50 performance over the last 90 days. You can see Bitcoin is down 13.4%. Not tragic. You'd swear it's more. But poor Arbitrum and the layer 2s on ETH getting absolutely murdered. And they got murdered in 2024 as well. Arbitrum fell another 67.6% in the last 90 days. Incredible. ICP down 60%. TIA down 60%. I mean, it's just murder out there. And there's some names up on the left that I don't even know what they are. I know Hype, XMR, the rest. XRP up 3.1% over the last 90 days. That survived. It's a mystery as to why. Anyway, that's where we are. It has been a bloodbath. Now, this is the roller coaster that I've never seen before. Shout out to Ash Crypto for this beautiful chart. We had a $10,000 red candle, a green candle on Sunday. Okay. First God candle ever from top to bottom. And the next day, down 10,000. You can't make this up. It's like insane. Insane. And people are saying, what? Why? How is this even possible? Well, we'll get into that because part of the story today, one piece is a piece of potentially really good news that will ignite markets, mark my words, if it's true. And the second piece is this, which takes us to what's going on in Bitcoin. First of all, it is an emotional roller coaster. There's no doubt about that. If you look at the action here, wow, this is the Bitcoin futures market sentiment, 1 hour time frame, all the way up, all the way down. It's basically a representation of this. Crazy. And this type of stomach churning volatility is killing everybody. People don't like it. Now, the CME. This is a big story as to why we probably went all the way up and all the way down is because a thing called the CME gap gets filled most of the time. What the hell does that mean? Well, CME gaps, these things occur in futures trading when there's a price difference between the closing price on Friday, when the futures markets are open for the CME, and the opening price on Monday, due to the weekend trading halts. This is a phenomenon that is very bizarre, and you'll tell your grandchildren, when I was a young woman or a young man, the markets were closed at the weekends, and they won't believe you. But anyway, that's the fun story. But these gaps are significant because Bitcoin's price often returns to fill these gaps. And historically, for Bitcoin, it happens 98.75% of the time they are being filled. And the other 2% or so, they're half filled or a little bit filled. But you can take it to the bank that typically traders use these CME gaps as a technical analysis tool for price predictions. Cash-settled futures can influence Bitcoin's price without any Bitcoin ownership. This is what drives the Bitcoin maxis mad. How can somebody get into a position for 100,000 Bitcoin without actually owning any Bitcoin? That's how. Futures. And the CME gaps matter because they indicate the future price movement and they're watched closely by traders, and can also bring about some type of self-fulfilling prophecy. So if there is a gap for $10,000, the traders think it's going to be filled, and they pile into positions to make that fill happen. Okay, so this is the reason we went up 10K and we fell down 10K in 48 hours. That's my theory anyway. So take it or leave it. Now, the good news is why we care. We had our first ever God candle, top to bottom, on Coinbase on Sunday. Okay. That was a historic moment. But the reason we care about this is because typically after such a CME gap gets closed, massive moves normally follow. That is why we care. Will it happen this time? Well, if we look at last time we had such a big gap filled, boom. Yep, it could happen again. So that's why we care. That was the CME story. And there's a couple of more nuggets that are super interesting and personally make me quite bullish. Alex Rogan, good to see you. Shout out to the Australians. They're so kind. Thank you. The Bitcoin stock to flow model shows you we are deep below the actual ranges of where we should be. Okay, fortunately I can't read, but these are the standard deviations away from the mean for the stock to flow price. And we are below the light blue cloud, which is over 2 standard deviations where the price should actually be. So anybody who knows stock to flow and scarcity, this should make you very bullish. Now, what matters here is why this signals it is not the start of the bear, because we never even penetrated where we need to be in the bull run. Unless, of course, it's a completely short cycle where everything is just dead. That's also theoretically possible, but I only allocate a 5% chance to that right now. But this tells me we have a spike to come. Historically, you can see all the spikes. 2011, huge spike above the standard deviations. 2013, huge spike. Late 2013, another huge spike. 2017, huge spike. 2020 was a bit of a muted cycle because of manipulation. We didn't get above that top light blue cloud, but we haven't even gotten to where we need to be since the actual halving, and that is at least above the center line for stock to flow. So either stock to flow doesn't hold for Bitcoin or it does. I personally believe in it because it's directly tied to scarcity, as long as it's demand. And we also are in a cycle where liquidity is tight, but that has to grow up as well. So that is another bullish indicator for me. And Plan B came in because we were talking about stock to flow. He actually came in today and said he believes the bull market is at a new crossroads, and his outlook is for a big rally to new all-time highs to come next. So stay tuned for that. Let's see if she's right. Again, I know when I say Plan B, people groan. I respect him. I admire him. I love his work. And I believe in stock to flow. So let's go. Another funny thing happened as well. MicroStrategy and Michael Saylor, or the new branded strategy, they did not sell any shares last week or do any other convertibles, etc. So they stayed put at 499,096 Bitcoin. And since that has happened, the NAV premium has gone back to 1.65. It was down low. It was down low 1.5 something late last week, but it's rebounding. And today it had a great day, shot up about 30 points. Let's get the MicroStrategy price live right now as we speak. $281. It shot up 24 today and another $6 in aftermarkets. So MicroStrategy is also not dead. So we'll see. Moving on. Saylor, because we're speaking about strategy, he was on CNBS and he said the Bitcoin market cap is going to 20 trillion next. 20 trillion. That's 10x from where we are today, which would take us to nearly $1 million. And then he said after that, 200 trillion, which is another 10x to $10 million a coin. He didn't give a time frame, but that's his plan. And sometimes when you have things like this that are theoretically possible, it is always worth hanging on to some, just in case he's right. But remember, fiat is also debasing. We'll talk more about that in a minute too. And Salinas, the billionaire out of Mexico, one of the richest men in the world, he admits to, I don't know who he spoke to again, spoke to some news release that he is 70% Bitcoin. 70% of his wealth is in Bitcoin. And he owns big corporations as well and big retail operations. And that's it. 70%. That's a hardcore commitment right there. And last week, I thought this was quite prophetic because last week I mentioned from Econometrics that the odds of hitting 75K were less than 3%. And as far as I was concerned last week, that's basically zero. We got close. We got to 78,000, but not 75,000. The question is, where do we go next? Odds are we go up, and we also hit the 83K. So I just thought for those people who are hoping to buy at 70,000, the odds of that happening right now are extremely small, given the data. Now, another big piece of huge news, if it's possible, and I know I get a lot of groans because I said for weeks and weeks, I said the tariffs are a negotiations tactic. If, and these are my exact words, I've said many times, and people are saying, you're wrong about the tariffs. I said, if they put these 25% straight tariffs without any exclusions on Canada and Mexico, they will literally incinerate Ford, General Motors, and Stellantis, as well as kill the business for the other Japanese automakers and Korean that make cars in the US, like the Hondas, etc. Destroy them all, because a lot of the parts are sourced from Canada and Mexico. Now, Howard Lutnick just came out, shout out to Evan as well from Stock Market News. He said President Trump may roll back Canada and Mexico tariffs tomorrow from Fox Business. And this, if this happens, then I was kind of right that it was just a negotiations tactic. I don't know what details the negotiating behind the scenes right now, but Howard Lutnick is not the type of guy who will come out and say something that's BS, okay? He's the Commerce Secretary of the country, and also a very big Bitcoin bag holder. So watch this space carefully. Now, the reason we care, if they roll back these tariffs, remember all the red market we saw this year so far over the last 2 months? Markets will explode upwards if Howard Lutnick is correct. And if these things are rolled back, we get back to normal and markets will go nuts. So we'll see if that's the case. Now, the other thing that's happening at the same time, I got to move my little picture. move it here so you can see all of these. We have a global rollout happening of Tesla FSD. I only drive with Tesla FSD. It's smooth as silk. It's better than my driving, and I consider myself a pretty good driver. But all over the world, we have it being released in code into vehicles in Switzerland right now as we speak. The Tesla FSD that rolled out in China last week has everybody shocked. Nobody has any idea how Tesla has nailed driving on Chinese roads, and some of those roads are very chaotic, incredible traffic, multiple lanes, just kind of nightmarish, but it's doing it. Also, Tesla FSD launched in Mexico, and Elon Musk confirmed yet again that the first unsupervised full self-driving service with no drivers needed will happen in June. We are in March, ladies and gentlemen. June is not far away. So in the meantime, let's make sure we stack a little bit of this because it is quite profound. And I know people say, but there's other competitors like Waymo and BYD and stuff. It's like, there is nothing on this planet that can do this with vision only and neural nets the way Tesla do it. Nor do they have the data. Nor do they have 7.5 million vehicles on the road. So that's it. Watch the space. It'll be fun. And speaking of AI and disruption, NVIDIA is from Shay. Shout out to Sanjay as well, who got this to me. NVIDIA is trading at its lowest earnings multiple in 5 years. Everybody's saying the stock market's a bubble. This stock, NVIDIA, hasn't been cheaper for the last 5 years, and it didn't go on a rampage till 2021. Okay, so please, everybody, let's look at the data. The answers are there. Don't listen to what the media says. Oh, NVIDIA's a bubble. It's going back to zero. No. And the demand for their machines is through the roof. Okay, boom, NVIDIA. Also, shout out to Kobasi. Volatility and Vitality are back. Sometimes the markets get a bit sleepy. We saw a lot of that in January. We saw on-chain activity tanking to zero. We saw a tremendous amount of fear around what I call the tariff terrors, tariff tensions, tariff tirades, whatever you want to call them. And yeah, maybe there's a plan behind what's going into effect. Maybe they'll be reversed. We'll find it hopefully tomorrow, and then expect the markets to explode. But this is what's confusing. Per Kobasi here, S&P is falling like a global trade war has begun. Remember, if they reverse those tariffs, market will go back up fast. Risk happens fast. Oil prices are falling like we're heading into a recession. I do believe there is some deindustrialization happening in Europe. There are recessions all over the world right now, so part of that is true. Gold prices are rising like inflation is on the rise. No, gold prices are rising because everybody's terrified of fiat and they want to secure themselves. And that's all most people know. Again, less than 4% of the people understand what Bitcoin is on the planet. But they all know gold. It's been around for 5,000 years. And bond prices are rising like inflation is declining. That's a mixed signal. Core PCE is on the rise, and that's what matters. Inflation is declining because people don't have any money to spend. So that's just my take. And crypto is falling like risk appetite has collapsed, where we saw crypto fall and then rise and then fall again to close the CME gap. My bet is crypto will rise from here. And tech stocks are falling like DeepSeek is back. And yes, NVIDIA is the cheapest it's been in 5 years. And that was impacted. But are you ready for the most volatile market in history? Yes, it is volatile. And when things are volatile, you can have a lot of fun. Now, switching gears, getting into the bad news. Hope everybody's doing okay out there. First of all, this also rattles people sometimes. A 14-year-old Dormant wallet was on the move, and they moved 250 Bitcoin. And whenever something like this happens, people think, oh my God, they're going to sell it all and the price is going to tank and everybody's going to get destroyed and wrecked. Well, first of all, again, it's only 250 Bitcoin, all right? And the first time they moved 50 Bitcoin to their wallet, which was a reward for mining a block back then, okay, the price was $1, which means that whoever this is, they've made about 8.3 million% on their Bitcoin bag. I should say it again. 8.3 million%. Not bad, eh? So who wants some of that action? Craziness. And yes, I'm glad they are able to liquidate it and make $22 million worth against 250 Bitcoin, but It'll be 25 million when Bitcoin goes back to 100K. So it's good. We'll see what happens. Anyway, not enough to impact the market anyway, so don't worry. Also, let's look at the market over the last 7 days. It has been pretty brutal. This is everything benchmarked against Bitcoin. ETH down another 10%. Sol beat Bitcoin ever so slightly. Cardano beat Bitcoin. XRP beat Bitcoin. Tron beat Bitcoin. Sui fell versus Bitcoin, but the big story is ETH got kicked in the teeth pretty badly. And in terms of the overall against the melting fiat ice cube, the US dollar, again, rough week, down 4.28%. Let's check in on the live Bitcoin price right now as we speak. Bitcoin's at 87.7. Here it's at 87.6, so it's off ever so slightly. Not a big deal. But again, mixed bag. The week, despite what people may think, actually was up for many of the crypto assets. Pursuit of truths. One thing I did notice happening on this recent dip, it was Bitcoin held up. So the alts sold off first, and then they clearly bottomed. Like when you saw Solana at 128, it's like, yeah, it can't go any lower. But they sold off first, and then they rebounded first. Bitcoin sold off last. And that's kind of what happened this time around. What else we got? Stocks last 7 days, blood red, with the exception of pharma. The drugs doing well, but Nvidia down nearly 9%, Amazon down 4.5%, Tesla down 10%. Elon's not making any friends in government right now by getting rid of fraud, waste, and abuse. People don't like that. I'm not sure why. But anyway, Patrick, thank you for coming. But overall, it was a pretty bad week. But again, if they reverse those tariffs, we go to the moon, ladies and gentlemen. And narrative time, real world assets is still winning. Okay. Ethereum over the last month down 25.6%. That's a big asset. Ethereum dominance is down at 9% right now. Shocking. It used to be 25%, down to 9%. Bitcoin down 12.4%, less than half of the dip. And other things, don't know what that is. Bridges are down, NFTs are down, meme coins are down. All across the board, not doing well, but things will come back. Now, from Key, here you can see the market sentiment is clearly different from late last year. Late last year, after the US election, we had the big run after November 5th. And then January was sluggish, very dead. Nothing really happening. Everybody's kind of waiting for something to give, but nothing did. And part of the reason for that is the US sentiment, or until the US sentiment improves, and until the on-chain activity comes back, and until the ETFs start buying, and the ETFs had a brutal week as well, we'll touch on in a second, things are neutral. However, the market cycle, the bull cycle, is still very much intact, and fundamentals remain strong, but there's now not much action happening out there at all. So we need that sentiment to change. And some of the things I see here right now as my little forecasters, that's going to change pretty soon. Also, this is a very cool thing from Dennis Porter. I thought this is quite profound. And I've done many analysis in the past. It has been a couple of years since I did that, but how a tiny little sliver of Bitcoin sprinkled onto a portfolio can save you. So let me try walk through this chart. Basically, the dollar lost 25% of its purchasing power since 2018. Depending on how you measure it, though, it's a lot higher than that. It's more like 40% if you ask me, maybe higher. But even just a 3% allocation into Bitcoin would have been enough to combat this 25% of losses. And this is why many of the states that are out there and the federal government is considering a strategic Bitcoin reserve, because this empirical data shows you that just a little bit can save you. Now, if you were a state that has a pension fund with a lot of future liabilities, and it's mostly in melting ice cubes or bonds, you're toast. It's not a question of if you should allocate to Bitcoin. It's a question of what can I do to survive and pay my liabilities in the future. That is absolutely crazy and very important to recognize. Anyway, time for a little bit of ugly news, like pushing the ugly stuff to the back so I don't burst the dream of everybody. We had the worst ETF week ever in the history of the Bitcoin ETFs. They had the third consecutive outflows and worst weekly outflow on record, totaling, I think, 2.9 billion. The 3-week total was 3.8 billion, but you can see it all happened last week. And much of this was due to the ETF hedge funds, or the hedge funds that play in Bitcoin on the carry trade, were unwinding that trade because the futures premium went to zero. There was no point. The carry trade just didn't work anymore. So that's why a lot was sold. Not that the traditional buyers, so the retail, got into the ETFs and then decided to get out a couple of weeks later. No. It was the carry trade reversal. Same thing we saw happen in July and August 2024. Well, it happened again. In terms of the assets, you can see here a little bit of a mixed bag. Bitcoin took the biggest hit, bore the brunt of the sentiment, that 2.6 billion out of the 2.9 billion. And there were some minor inflows, about 2 million into short Bitcoin. Ethereum did not escape the negative sentiment. Over $300 million out of their funds. Solana, 7 million out. XRP, 5 million in. And Sui had the biggest week ever, taking in 15 million. So that was good. Cardano down 1.2 billion, etc., etc. So mixed across the board, but I do expect when I come back next week to do OCTA next Tuesday, this will be reversed. So we'll see. And that's typically what happens, like we showed at the very beginning with the fear and greed. When fear is extreme, you buy. But sometimes the TradFi sells as well. And token unlocks for the week, some really big ones as usual. I always talk about Athena as a money grab. It's always on this list every single week. But this week, they have a 66.19% unlock. Stark, as usual, is in there, 2.33%. Aptos, 2%. Render's on the list too, but it's only 0.1%, which is nothing. And the final piece of ugly news before I wrap, the GDP forecast is tanking more each day. Much of this is driven by confidence, which has been shattered with the trade tariffs. Jobs are being lost in Washington, D.C. Multi-million-dollar homes are being put up for sale. They're going to take it in the shorts because you can't put a lot of houses on the market in short order and not expect to take a big hit. So if you're in the market for a home in D.C., good time to buy because you can basically walk in with cash and name your number. You'll probably get a great deal on one of these $10 million homes. Not financial advice, but the point is this is going down. I do believe this will recover once things get straight, once the long end of the bond comes down, rates come down, and liquidity pops into the market. We should pop up again. But right now, it's looking bad. Remember, per my calculations, 7% of GDP growth over the last couple of years was driven by government spending. That's being cut. Therefore, if you see GDP growth of 2%, and 7% of that is government spending, you take that 7% out, you're actually only at, you're minus 5%. If you have that government spending from 7% or 9% or whatever down to a fraction of it, you're still going to turn negative. And that's what I think these numbers here are reflecting right now, which will be bad. Especially 1 quarter is okay, 2 consecutive quarters is considered a recession. But as I also say, there's always a recession happening somewhere, in some industry, in every country. And remember, meme du jour, emptying on a bit of a positive note. Shout out to the IA apologist. This one is for him. Remember, sometimes people can't take the heat in the kitchen, and they step out of the arena. But remember, the markets are a sport, or as I say, investing is a blood sport, okay? They are designed to wreck your head. Do not let that happen. Be stronger. And sometimes stepping out of the arena at the wrong time can be quite costly. So the time to step out of the arena is when greed is really high, not when it's at max fear. So with that, I hope you enjoyed the show. All these videos are turned into podcasts and emails and slides and write-ups and all that. Thank you to the team that does that. And don't forget to subscribe if you want to amplify your intelligence. Thank you so much. Battle Rap Boutique, Sean Donnelly, TND Tesla, K8, DBF 430, the whole gang here. I really appreciate seeing everybody. Thank you. Have a good night. Bye-bye.